I'm Matt Bouchard with NAREIT's REIT.com here in Phoenix, Arizona for REITWise 2015, NAREIT's Law, Accounting, and Finance Conference. I'm joined today by Greg Ross, partner with Grant Thornton LLP. Greg, thanks so much for joining us.
No problem, Matt. Thanks for having me.
Now, you've spent more than 20 years in this industry. What's been the biggest change that you've seen related to financial reporting?
Wow, Matt. I think the biggest change that we've seen, obviously, was SOX. I think probably moving past that, since I think most people are tired of hearing about SOX, moving past that, I would say, fair value accounting. There's a lot of emphasis on fair value accounting. Investors want fair value accounting, and so therefore there's a lot more items on the balance sheet today with fair value implications. And also with that, with acquisitions and purchase accounting. It wasn't too long ago where all acquisitions were either recorded to buildings or land, and now look, there's a lot of effort that goes into the assets that are recorded at fair value or broken out as far as for balance sheet recording. So it's lots changed over the last 20 years, that's for sure.
Now, it appears that the REIT IPO pipeline is ripe for activity for the remainder of this year. What trends are you seeing in the companies that have recently come public, and as well as those waiting in the wings?
Well, trends, I think, Matt, the non-traditional product types, like timber, the healthcare office, solar, the cell phone tower. I think the non-traditional product types are what the trend is now. From an IPO perspective, that seems to be more of the hot items at the moment, whereas maybe the larger REITs that are already existing obviously are in acquisition mode, buying up some of the smaller ones. So you don't really see maybe as much activity with the multifamily and some of the others that you did previously. But outside just pure multifamily, then it's really the non-traditional products.
Right. Now, with a quarter of the year already in the books, how is the market for real estate capital looking for the rest of the year?
I think it looks really well. The REIT industry typically follows the macroeconomics of the U.S. So as the U.S. economy improves, REIT investments typically improve. We have low interest rates. We expect for them to stay. You have consumer spending that's continued to rise. You got unemployment that continues to fall. I think all those are really good indicators that the real estate investments are pretty hot right now. And again, I think from what we've seen with our clients and our prospects and just looking at what's ahead, we feel pretty strongly that the next few years are, there's a lot of optimism as it relates to REIT investments.
Great. Well, Greg, thank you so much for joining us today.
Hey, no problem, Matt. Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.